Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 23rd of May 2020 and we're publishing our gold and silver weekly update for the week ending the 22nd of May. Gold fell $7 last week from $1,743 to $1,736, having hit a high of $1,765 and a low of $1,717. A fall of just 0.4%. In sterling terms, gold finished the week at £1,427. That's down £13. And in euros it closed at €1,592. That's down €19. Silver rose 59 cents, from $16.66 to $17.25, having hit a high of $17.66 and a low of $16.66, a rise of 3.5%. So it performed extremely well. In sterling terms, it closed at £14.18. That's up 42 pence. And in euros, it closed at 15.82 euros. That's up 0.41 euros. The gold to silver ratio fell again this week from 104.6 to 1 to 100.6 to 1. The Dow Jones closed on Friday at 24,465, down 8 points on the day but up 780 points on the week, more than reversing last week's fall. The S&P 500 closed at 2,955, up 6 points on the day and up 92 points on the week. And the Nasdaq closed at 9,324, up 39 points on the day and up 310 points on the week. Brent crude closed at $35.13, up $2.63. And WTI crude closed at $33.25, and that is up $3.82 on the week. The dollar index stands at 99.86. That's down 0.54 points on the week, but still hovering around that 100 level. Now gold rose initially, fell back, attempted a recovery on Wednesday, fell back again and staged a modest recovery on Friday ahead of a long US weekend holiday. The two previous closing Fridays support our conclusion of a relatively benign performance for the last week. Now a quick quote from our last week's update really typifies the position. Quote, "From a technical point of view, the next resistance level for gold is seen near the October 2012 highs of $1,791 and support at the 20-day moving average of $1,709. Because of psychological rounding, which though not scientific does appear to have an effect, we're therefore calling support at $1,700 and resistance at $1,800. And of course, as mentioned earlier, the high was 1717, not far above that support level mentioned of 1709. I said high, I meant low. And the high was 1765, which was below the resistance level of 1791. Now this week's technicals are quite similar in terms of resistance and support levels. However, momentum has changed. There appears to be support at the 10-day moving average of 1727, with resistance at May highs of 1765. But short-term momentum has turned negative, and the fast stochastic has generated a crossover sell signal. Medium-term momentum has also turned negative. Now, whilst technicals do not guarantee the price movements, it gives an indication at least of what traders may be considering. Now, a relatively strong dollar has also acted as a headwind for gold prices, though poor weekly job figures claims again on Thursday acted as a tailwind, which is why we saw a nice little recovery on Friday. Now, the interesting thing this past week was that the Department of Labour reported its first breakdown of job losses per member state. The jobless rate rose in all 50 states and the District of Columbia last month, and 43 states recorded the highest level on record since 1976. The rate in 3 states exceeded 20% in April, well above the national rate of 14.7%. which was the highest on record since, wait for it, 1948. Nevada actually registering the highest unemployment rate in the United States last month at a phenomenal rate of 28.2%. Now, naturally, an easing of lockdowns in many states is expected to curb these increasing jobless figures, but we suspect that it may still take a couple of weeks, if not longer, for the situation to begin to reverse. Silver, on the other hand, performed well. In last week's update, this is how we summarise the silver situation. Quote, silver has pushed through the $16 resistance level and has breached the top of our upwardly raised range of $15 to $16.50, which is extremely bullish. $17 is the next target and resistance range, which not that long ago was a support level, and $17.25 is seen as major resistance. Well, silver did breach these figures and rested on Friday at that resistance level of $17.25 that we mentioned. It's no surprise to those who follow silver seriously that in the past, $18 has seen quite considerable selling pressure, which is why we've advocated not to pay prices in the late 20s. Especially, we highlighted this only a number of weeks ago when we saw outrageous premiums being charged for physical silver. You see, the spot price will struggle to go beyond $18, especially in an environment of low productivity and thereby low industrial demand. Now, of course, if gold, for monetary purposes, were to gain another head of steam and rally, then silver will be pulled up with it. But under its own steam for now, $18 seems pretty resistive. Now, a number of technical analysts are suggesting now that silver demand is somewhat exhausted, and not to be surprised to see prices fall back again towards the $16 level. We too think silver has had a great run, and whilst it's not inconceivable that silver prices cannot hit $18 or even $19, there would have to be, in our assessment, a geopolitical event to cause this to happen right now. Longer term, we're still very bullish silver, but short term, less so at these levels. Those who bought when we suggested it back in mid-March would now be looking at a $5 plus gain, and that's a very satisfactory rise in just 2 months. Now, from a technical point of view, the resistance level rests at $17.50 and the support level at $16.50. Should silver fall, though, to $16.50 and close below that level, then downside momentum will likely increase and silver prices would head towards the 20 EMA level at $16.10. A move below the 20 EMA will then push silver towards the 50 EMA at $15.80, which is the equivalent to April's highs. If, however, silver manages to settle above the resistance of $17.50, it will gain additional upside momentum and head towards the next resistance level of $18.15, though we suspect $18 will intervene initially. But quite frankly, we do not see this plus $18 happening, certainly not in May. Now, before we take a look at this week's economic news, it's worth pointing out that last week, the weekly jobless figures came in at an additional 3.3 million, compared with an additional 3.2 million the week before. But on the positive front, the market manufacturing and services flash PMIs were stronger than the previous month, and we shall see how these are reflected when the full figures are announced. So let's now take a look at this week's US economic news. Well, on Monday, none because it's Memorial Day holiday. Tuesday, Consumer Confidence Index for May and new home sales for April. Wednesday, the Beige Book announcement. Thursday, initial weekly jobless claims, durable goods orders for April, and core capital goods orders for April. And on Friday, advanced trading goods for April, personal income and consumer spending, and core inflation, all for April. And the Consumer Sentiment Index for May. So once again, all eyes will be on both Thursday's and Friday's figures. So this coming week, we're expecting really a slight weakening of precious metal prices, and especially silver. Gold may hold its own, but we cannot help but feel that silver's got ahead of itself somewhat. That said, during the course of this past week, we have produced a number of very relevant videos, namely, as the dollar burns, other currencies are burning faster. JP Morgan recommends gold, but will it be confiscated? Helicopter money will cause gold and silver prices to rise. Gold and silver rose and then fell back. Why? And why serious investment advisors and investors now recommend gold. Now, we know that most of you listening to this video podcast will have watched or listened to these. But in case you haven't done so, please try and make the effort, as they are setting the scene for the next few years ahead. Now, we've placed links to each of these in the description box below. And we've also, the previous week, published a video entitled, Does $10,000 Bitcoin Challenge Gold and Silver? And although we felt that at that time Bitcoin had peaked a little for the time being, it nevertheless still offers some alternative for those seeking to come out of equities and may be worried about future currency devaluations. And again, we have placed a link to this video in the description box below. Now, we would like to make clear that when we produce these podcasts, we do not do so just to fill up time or space, but because we believe they have some relevance, either currently or moving forward. The one area we suggest that all of us pay attention to, and that is the political battle looming over UK-China relations. And this is a subject we shall address in tomorrow's video. This is the one geopolitical subject or area on the horizon that could indeed potentially worsen global trade and even spark some possible military infractions. So stay tuned. Meanwhile, what do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so you're notified of our videos as and when they're published. Not forgetting that we update our Richard and Greg channel every few days. And again, if you haven't done so, please subscribe to that one too. We trust and hope you have an enjoyable and safe weekend and a most happy and glorious Memorial Day. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.